What's going on? Welcome to the Tax Practice Revolution. Now today I'm going to be teaching you how to use the top 3 tax strategies before the year's end to maximize savings for you and your clients. Now if you don't know who I am, my name is David A. Pettis. I am a tax strategist turned tax coach to you. As a tax professional today, I believe that you are undervalued in the marketplace, and over the last 18 months, I have taken 161 tax professionals and helped them average $43,000 per month additional revenue by offering advisory services. And I do this because I believe that tax professionals deserve to get paid what they're worth, and I want to help you get the same. So let's break down those 3 top tax strategies. And in fact, I'm going to add a bonus. So let's go to the whiteboard. All right, so if you want to maximize savings for your clients, these are the 3 strategies you're going to want to maximize in 2024. And they'll probably work in 2025, who knows, but I'm recording this in 2024 that I think can benefit you right now. So first we're going to start with my favorite, which is the S Corp. Now this is a really talked about strategy, which is interesting because a lot of people talk about the S Corp. This is including clients and other tax professionals, and they get the idea, like we could save payroll taxes, we could put them on their own payroll, we could lower their pass-through activity to an ordinary gain versus, self-employment tax. There's all these benefits, but here's the challenge with the S Corp election is that many people prematurely take the S Corp, and so in certain years they don't actually benefit from S Corp. And so some people, as if they work with a great advisor in the past, they may have not elected to be an S Corp just because they weren't showing profits. Now this year, as we approach the end of the year, this would be a great time if you met a new client, an existing client, to reevaluate their entity structure and say, hey, I see you're a partnership. We probably need to go S Corp because we know that you're going to pay self-employment tax. Or if you're a sole proprietorship, we need to file for an S Corp. Now, you might be thinking, well, David, what can I do? Well, here's what you do. You're going to do a late election, okay? A late election is always worth shooting for. And in fact, you can get a late election most times just by filling out a simple application, putting a very, very brief disclaimer or notice in the IRS saying, hey, I'm ignorant, I didn't know what I was doing, and now I know what I'm doing, and I want to make sure we get this right. And 99% of the time, they're going to approve the late election. So this is a great strategy for income earners that are going to net over $40,000 a year, who are willing to offer payroll to themselves and any of the ownership, and who want to benefit from things like the Augusta rule, want to benefit from things like paying kids, who want to benefit by giving fringe benefits. All of these are ways to maximize deductions here for this, right? Now, I love an S Corp for every business that's operations. Now, you got to be very careful. You don't want to make this recommendation for real estate holding companies or asset-based companies, okay? So that's number 1. So S Corp, can't even talk. S Corp. Number 2, I'm going to add this one in there because this is good. Income shifting. So you might be dealing with clients who are going to get a lot of payments. Like I just met with a client yesterday that talked to me about how they were going to get about $250,000 in December from people who were going to pay them prepaid. And I said, man, we need to make sure that those come in the form of checks, and I need you to make sure that those checks don't get deposited into January. So we're shifting income into January. Now, that doesn't hide income. That doesn't do anything wrong. What we're doing is we're just moving the income from one year to another, calendar year, calendar taxation. It's a great strategy for anybody who's already at a number that they're just like, man, I'm going to pay a ton of taxes. I don't want to pay any more. Great way to shift it. Gives you the opportunity to give another 12 months to mitigate the liability. It's nothing special. The way you do it in accounting is just don't take the deposits, or if they're in accrual, you can just record the income as it happens in January. Like for an example, if the payment was due for work that's due in January, then let it fall in January. If you're doing an accrual, if you're doing cash, just don't make the deposits. So it's a really great freaking strategy. And if you're out there right now thinking who can benefit from this, I'm telling you, all your clients who are taking income payments in the 4th quarter around November, December, it's a great freaking tax strategy. So we've got S Corp, we got income shifting. What is next? Next is going to be contributions to accounts, right? Now, these can be done, right, to retirement accounts at the end of before the deadline of filing. But what I like to do in contributions, I like to think about retirement. Okay, I like to think HSA. I like to think about accounts that I can contribute to now so it doesn't have to make me delay for the future. It already takes into account in my tax saving strategies. It's a really good way to do it. I mean, I'm not in love with these things, but they can be eventually turned into a self-directed account. That could help them in the future if you're trying to help them build wealth as well as tax savings. I think this is a great strategy, very commonly used, but they can go to Fidelity and just open an account. This will help you and them plan for retirement. These are typically for people who don't have a retirement. If they're business owners, it'd be a great way to do it. All right, I'm going to give you one last bonus, okay? This is my favorite one, and this one has to do with real estate. Now, this is a real estate strategy, and I look at their assets, and I looked how they use them during the year. So for an example, there are 4 real estate tax strategies. There's the rep status, which is the most common or the most wanted. There's the short-term rental loophole. There's grouping election. And then there's the spousal loophole. So I use those 4 strategies and I say, okay, which one of these strategies can I help them qualify for? It's a super good way to get people to maximize their benefits using real estate. Now, all of this is very important to understand because if you don't get this, what happens is you put yourself in a position to not look like the expert. So I love using real estate as a strategy, as a bonus. So right now what I would be looking at is, okay, what properties do they own? When did they put them in service? If it was in 2024, they bought them this year, I'd be looking at what type of property. Was it long-term or short-term rental? And then I'd look at the purchase price. I'd look at like improvements because like what you do is you get the purchase price, PP, plus capital improvement, CI, equals what they call the asset value. And then what you do here is you subtract land, and then this is the structural value, okay? Now, why is this important? Because once you know the structural value, this is the foundation for depreciation, okay? You want depreciation, and that ties to anything depreciable. We want to talk about depreciation from real estate, vehicles, equipment, machinery, anything they buy, we need to take the depreciation. But this is my favorite. So I'd be looking at the properties, determining what strategy they fall into, then calculating it, then it'd be determining if I need to do a cost seg. Love real estate, guys. So these are my 4 top tax strategies for the fourth quarter and beyond. I think you should be paying attention to this stuff because you could help your clients. Now, if you don't know how to execute these strategies or don't know where to begin, we've got a software called Tax Maverick. You should check it out. All of these strategies are outlined and so much more in extreme detail. You don't even have to do anything. In fact, enter your client's information. It'll automatically calculate what strategies apply to your client. Then you answer a simple set of questions and boom, you look like the expert. It even gives you the tools to execute these strategies, meaning how do you do a cost seg? How do you do income shifting? How do you get this S-Corp late election, including the detailed steps, outlines, guides, and everything. But if you don't have any of those resources, you don't want to do it, don't worry. I'm teaching you here so you don't have to go broke anymore. You don't have to go to tax season burned out. Working with high-value clients is the priority for me, and I don't want you to feel the same way. So if you like this stuff, subscribe to the channel, follow me for more. I'd love to see